Hello, hello, hello. Today we're going to go over the Roth IRA portfolio in Robinhood. Today is March 2nd, so this marks the end of February. Year to date, we're up 0.39% on the portfolio. That's $65.10. If we go back to the 1 month, we'll see that we're actually down 0.51%. So last month was very interesting to say the least. Our portfolio actually rallied an incredible amount to start. We were up 4.5% for the month, which is just amazing. And that got us up to $17,658.14. But as you see, after February 19th, the market just started to almost tank. And there wasn't really a single indicator that led to this. Maybe some inflationary data coming out, consumer sentiment information coming out. But nevertheless, our portfolio went from 17,658 to 16,793. So that's a decrease in almost $800 from the middle of the month to the end. So we were doing incredibly well. And then out of nowhere, it seems like everything just kind of turned around a little bit and started going down. And personally, I have no issue with that. Down 0.5% in a month by itself isn't very bad, but it also is good in the fact that things are slowing down a bit. And this is something that I've been asking for because rapid acceleration in stock price, assuming earnings are just going to grow exponentially forever, it's not sustainable. At some point, we have to hit a cap, things have to normalize a little bit, and valuations have to be adjusted. And I think this month and last month, we kind of started seeing that, and I feel like next month is also going to represent that. If we look at the 3-month chart too, we can see that over 3 months, we're down 1.33%. That's incredibly interesting considering the last 2 years, it was a 20% gain in the S&P. So you got a 3-month time period where no gains were found in the portfolio. You're actually down 1.33%. I mean, if you annualize that, we're going to be down 5% annually, which is that would be a nice breather, honestly, especially when you have 2 years of going up 20%. That's just not sustainable. But let's look at some other metrics quick before we move on. Over a week, down 2.84%. That's kind of what we're seeing at the end of the month. But on the last day, we did actually regain quite a bit. So if not for this last day, we would not be looking the best for the month. We would be down maybe 2% because we got 1.5% on that last day, and we're already down 0.5% for the month. So with that in mind, it was a very interesting month. Things kind of simmered down, cooled a little bit, but I've been wanting that, and I'm very happy with it. If we're going to look at our equities individually, we have QQQM, which is a cheaper version of QQQ. That's NASDAQ 100 exposure, 49.1 shares. That hasn't changed. I haven't been buying that because I want to balance my portfolio out correctly, and we'll get into that. VOO or VOO, 11.81 shares. And Google, that's 0.386766 shares. So that has been increasing. I've been specifically buying more Google. And now if we look, this is an interesting position because I was quite bullish starting a month ago. But if you look at the last month, Google's down 15.57%. There's not really a reason for that. If any reason can be pointed at, it's the idea that they're losing their dominance in the search market. Everyone knows what Google search is. You use it, you probably used it to get to YouTube today. The point is that ChatGPT and these other LLM models like Llama with Facebook or Grok with X from Elon Musk, these are taking search market share. So instead of going to Google, people are rather just going to ChatGPT or Grok and looking for an answer there instead of looking at Google. And in a lot of ways, it's more effective, definitely. So, I mean, Alphabet, Google, they've been working on the Gemini model. If they want to see this turn around, they gotta really, really step up on Gemini, get some promising results, and get their benchmarks up. So if we look at Google, we can see we have $65.95 in our valuation. We're down $7.31, which is 9.98%. Now, I'm not upset with that at all. I'm glad that I'm just slowly buying to the position rather than I dropped $1,000 and then I'm down 10%. I'm just dropping a slow amount at a time. We're building up this position. So people seem like they wanted to reevaluate Google, Alphabet, and they evaluated it down 10%. So at this point, now I can buy in at a lower price point since I did start buying in at $200. So it's a nice change of pace. I mean, if you look at the 3 months, they're still up 1%, but they did peak around $206, and now they're at $170. So a big cool down on Alphabet. If you look at over time, it's still been increasing incredible. and I do believe in this company. I'm going to have a video where we go over the valuation of Google on its own, and I think we'll be able to make a pretty promising case for Google, and I do think there is a good case for it. So a couple things I wanted to go over regarding Robinhood since my last video. They released futures, which is incredibly interesting to me. And specifically, I'm going to want to look at the gold futures. Now, if we look at gold futures, we can see this follows, and of course, Robinhood always has errors in their chart. But imagine there's a nice chart here that follows the tracking of gold. Okay, there we go. Just refresh the page. So gold's up 28% last year. Now, you'll notice a couple things here. You have to have margin to trade with futures, so Robinhood makes money on that through percentages. But you'll see some metrics down here. We'll see multiplier, $10, tick size, 0.1, tick value, $1. Okay, so this is very interesting when it comes to futures. You have to leverage with margin. First, you have to borrow money to get into it, but also this multiplier gives you a leveraged position. So for every dollar that you see moved in this price valuation, you're going to actually move $10 in your position. So you'll buy the contract, and we can see one of these contracts are represented by this price that's moving, and it should, I think it might be trading right now because they do constantly trade, but you'll see $2,878.50. That's the cost of buying a contract of gold. Now, for every dollar that moves, that's $1 in your pocket. So, well, for every dollar that moves, that's $10 in your pocket. If it goes up $1, you gain 10. If it goes down $1, you lose 10. So if you had a gold future contract over the last year, you'll see we had a $629 difference in pricing. That's plus $6,290. So you can see how that's a little risky if you want to look into it, but you can buy or sell. So if you think gold's going down, you get a sell contract. Think it's going up, it's going to buy a contract. This is something I wanted to point out because generally gold is an inflation hedge and goes up over time. So if you're quite young like me and you got a lot of time to work with it, and you have a significant size portfolio, which I don't yet, you could add a gold future contract in there to kind of hedge against inflation. So that's an idea I've been playing with a little bit. Haven't looked too much into it. It is risky because it is leveraged 10 to 1, which is a lot. If it was 5 to 1 or even like 3 to 1, that would probably feel a lot better. But 10 to 1, quite significant. Maybe look at silver contracts or something else. But all it is betting on the future price of a commodity. In this case, I was more interested in gold. I'm going to throw a clip up on the screen. You're going to see that I opened a mystery box under the credit card app. So if you had $10, you could basically do this mystery box spin and it will give you a reward. I got a 4% for 24 hours. So unless I was spending $1,000 in 24 hours, I just simply wouldn't get value from it. But nonetheless, there are some pretty cool rewards, and I did just want to see that animation. So figured I'll throw that up on the screen. I do use the credit card through Gold since I am a Gold member. That's something I plan on making a video on in the future because I get a lot of benefit out of my Gold membership. But nonetheless, I probably wouldn't do it because Robinhood is trying to profit on that. It's a negative EV, so I just won't recommend it. The stock I wanted to look at was Apple. If we look at their last 1 month chart, you can see that they're up 5.72%. But an interesting thing is that Apple did release the idea of an Apple 16e iPhone, and that retails for $600. It's basically the budget iPhone. It's got Apple Intelligence. It's got the latest processing chip. Cameras in there. Phone size, I think, is a bit smaller. So people, they weren't really wowed by it. But you can still see Apple has been doing well in the last month. This could be a possible stream of revenue for the company, which might show why the stock has been going up in value. But I don't know. It feels overvalued to me. I don't think it's showing up 5.72% in the last month. Just doesn't quite make sense to me. Now, an interesting thing I did want to point out is if we go to my standard investing account, my brokerage, you can see $5,228 that I have in it. But if we go over here to SGov, which is 0 to 3 month treasury bonds, if you buy into this, it represents treasury bonds, that I have $6,197.89. That's exactly $1,000 more dollars than I have in my brokerage account, which means I have margin on my brokerage, which sounds incredibly out of character for me, but it comes from the fact that with Robinhood Gold, which I pay $50 a year for, and I get my gold perks, and I'll make a video on that all across the board, you do get $1,000 worth of margin interest free. So that's free money they're giving for you to invest because you don't have to pay interest on it. That is money you have to pay back to them. You have to give them that $1,000. But my point is that you can leverage, especially with high interest rates right now, that $1,000 and just simply buy a treasury bond fund, basically. SGov is kind of one of the most reputable ones I could find. And that basically allows you to get interest on that $1,000, which is interest free. So if you think of a high yield savings account, and these treasury bonds seem like they're yielding slightly higher right now, you're getting a free $1,000 to gain interest on. And right now, I think it's like 4.4% yield. That almost covers completely my cost of gold. So once I figured this out, that they give you $1,000 free of interest, yeah, I started going crazy on it. Got that in the account right away. So this is something I do want to make a separate video on because I think there's a lot of value in it. But you can see the value of the treasury bond increases every month. And at the end, a dividend is paid out. And that's what represents for you your yield on the account or your interest accrued. So if you're thinking in terms of a high yield savings account, that's basically how the interest goes. A couple more stocks we're going to have to look at for month end. Look at Tesla, and you'll see they're down 23% in a month, which that's crazy considering if we look at the large chart, Tesla was just getting pumped up like crazy after Trump got reelected. Why are they down? Why are they down 23% in a month? That's the question of the day. That comes from the fact that they reported their sales, and in Europe, their sales dropped 45%, which that's almost half of their sales. That's a lot of revenue that Tesla's missing. And not only are they losing revenue, they're losing revenue at a point that they need to rapidly be increasing revenue. So complete opposite. You would expect them to have this good growth, maybe like a 5-10% growth in Europe. No, they lost 45% of sales. A lot of reasons probably go into that. I mean, America's getting a little bit of flack from the election, and Trump and Musk are kind of buddying, and it's rubbing a lot of people the wrong way. And I mean, when you're CEO of a company, you got to keep that thing in mind, no matter the politics. You have to keep that in mind. And him buddying up with Trump, I mean, if you look at it, it's still paid off in the stock valuation, but that's just the stock valuation. In terms of revenue in Europe, it hurt them by 45%. I don't know last time they reported earnings. Seems like they still got to report it, but I wouldn't be surprised if they fell quite short on earnings and stock valuation went down. I just would not be surprised by that. And I've been saying for a long time, Tesla's just completely overvalued. I stand by that fact. I just think it's just crazy overvalued. The revenue, it doesn't even come close when you do a discounted cash flow model of reaching the current valuation. And they're not growing, they're actually lowering in their revenue. I don't know. The valuation is just at that point, especially out of control. And I think people are starting to look at that and thinking, hey, Tesla isn't kind of what we're chopping it up to be. Okay. I feel like a stock we talk about every single month. We have NVIDIA, and they were up crazy throughout the month. They were up 23%, which for NVIDIA at its high valuation is incredible. And that's because they've been doing NVIDIA things. They've been bringing in revenue. Everything's been going smoothly. GPUs shipping out. People are buying things. And they did beat on their earnings. We can see down here that they had a beat. They had a beat, which is great for them considering they already have high earnings valued into their company. But they beat on it, which everyone was keeping an eye out. But even after they beat, and we saw this initial increase, the stock went from being up 22% in the month to being only up 9% in the month. So an incredible drop. And if we look, because 1 month might look good, hey, 9% in a month, that's still amazing. Take a view out to 3 months, they're down 10%. So year to date, they're down 8%. But let's look at these larger charts. Let's go out 5 years. Now, I said about in October, and I think they're pushing 147. I said this company is beyond its fair value range. I think I did a video and fair value came out to be 130, maybe high 120s. And they're trading at 147, not very far off, but 10% overvalued. And we can see since then, they've been bouncing around where I estimated that fair value range to be. So again, I used a really flawed method. I did earnings per share and compared it to old earnings per share. But the point being is I do feel like if they're at proper valuation, there's not a lot of growth to be factored in. So, I mean, we can see Morningstar here, and they're really close to what I thought. I might have been at like 132, but they said fair value is at $130. And right now, if you look at their valuation, they're at 124. So slightly below fair value. I mean, 4% below. But if you look, they've been bouncing around their fair value, which is $130. So, I mean, even when stocks are going crazy, everything seems to be getting overvalued a little bit. You do have to remember the fundamentals that revenue, discount, and cash flow, that's where valuation should be coming from. A lot of times, even if people don't realize it, you're still bouncing around that number. The last thing I want to look at on Robinhood today was Bitcoin. And now if you look at the month, I don't know why they got these colors here. That looks horrible. We're down 3% on the month. And now that wasn't crazy, but we were down 18%. So Bitcoin was down an incredible amount. But if you look, and this was today, we were down minus 11%, but then we ended minus 3%. Why did we have an 8% jump seemingly out of nowhere in Bitcoin pricing? That's because Trump, I didn't read the news exactly, but he announced that the Bitcoin reserve or the cryptocurrency reserve, and he wanted to found it on Bitcoin for the US, has some sort of factor in it now. So the US is going to start seemingly investing in Bitcoin as some sort of hedge against inflation, investments, some sort of stable currency to base all transactions off of, that kind of idea, which I think is incredibly stupid, for one. But if you look at it, it seems like that just kind of rallied Bitcoin back up. So, and this is kind of this idea that I've been having about Bitcoin. And we've seen a lot of asset inflation in the last 2 years, and that's in homes, stock pricing, cryptocurrency. I feel like Bitcoin, especially, probably not so much Ethereum, maybe Dogecoin or something like that. But if you look at that, these charts almost represent the just abundance of wealth flooding into these assets, which on paper that might make sense, of course, but it's almost represents the greed of investors because there isn't any revenue necessarily behind Bitcoin. It doesn't generate revenue intrinsically. So it's just people having their spare assets that they want to invest, and they're investing in Bitcoin, which is something that's incredibly speculative. So it feels almost like a indication of greed. That's how I've been kind of viewing it lately. And just similar in the fact that, I mean, we looked at Nvidia kind of strong for the last 3 months. Look at Bitcoin, they're also kind of strong for the last 3 months. So, of course, that's apples to oranges comparison, but it's kind of what I've been seeing in the stock market. I mean, if you look at the last 3 months, on Bitcoin, they're down 2.67%. Now let's go to just SPY. Let's look at the S&P. Go at the last 3 months are down 1.55%. So if you compare the charts, which Bitcoin and the market are extremely correlated, if you look, Bitcoin, when it started kind of faltering, you started seeing less inflow of assets into the general market. So it's kind of a pattern I want to observe a little more on my downtime, look into it, but I do feel like speculatory times and hopefully just incredible asset flows coming into the market will start to slow down now and things will be a little more realistic. At least that's what I'm hoping. If not, nothing I can do about it. To end for the day, that is incredibly bright. Let's look at some of our investing charts here. We can see our general chart, which we have our contributions in red, our what the SPY value would be if we just invested in the S&P in blue, and then our current balance, which is in green. Everything's looking good. We see values have been going up steadily since 2023, so I've been feeling good about this. We look at our profit. We went from being profitable $5,300 to $4,961. So that is about $360 that we lost this month in market gain, which that was about expected. We put money in, sure, but the market did really suffer this month. Now, if we look at the difference between our portfolio and the S&P, we were up, and this was at New Year's, we were up 320 on the S&P SPY comparison, but we have pulled back a little bit, and we're only up $100 right now. And that makes sense because the beta of the NASDAQ is 1.2, so we expect more volatility in that. And when we have a down month, we're going to see even lower numbers compared to the SPY. So although SPY did decrease, QQQM, the NASDAQ 100 decreased at a faster rate. But when it does grow, we expect that to grow at a faster rate. So it's a balancing act, and we can see that we had this great comeback, which I talked in my other video, from being in a, a retirement fund, so it was weighed out improperly, in my opinion. I wasn't 100% stocks, and I was down at 328. And through increasing my exposure in stocks and focusing on the NASDAQ, I've made an incredible comeback. And we went from being down 300 to one point being up 300. So I feel pretty happy about that. Look at our open positions. QQQM and VU, nothing too crazy has changed with all that. All the numbers are here. But we can see Google, this cost basis has been decreasing because I've been buying while it's going down right now, which we talked about. But the profit, we're only down $7.41. So although it says 11.26%, it's really nothing that crazy. Portfolio at last market close, 16,791 compared to the SPY at 16,684, $110 difference. We can see our weights are improving over here. I wanted to get QQQM to about 60% and VU and Google up to the other 40%. So Google went from being 0.01%, we're at 0.4, so slowly increasing, but steadily increasing. So the little yellow sliver and the red bit, we want to keep increasing and decrease that blue just a little bit because prices raged up on the NASDAQ, and now I need to make sure I properly rebalance my portfolio over time. And I don't think there's been much else. We look at our contributions here, $11,830 in the account. Portfolio value is at $16,791, making our profit $4,961 or 41%. And that's with investing my money slowly over time into my portfolio. With all that being said, the last month was definitely a little bit of a hit. I don't think anyone would tell you last month was great, but I do think there's some silver lining that's coming out of it. And now look, we're in after hours for the next day, so down 0.1% for next month. Great start, great feeling. Love to see that. But with that being said, I hope you guys enjoyed this video. Feel free to ask me any questions, share the video with your friends, and make sure to tune in for the next one or future videos that I got coming up. Thank you all, and take care.